Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Peter S., Paul M., and Jared W. Natural Resource Executive Ian Stalker has joined us on the show today. Ian is involved in a number of companies, including Helium One, where he is managing director. Helium One, yet to be listed, is focused on projects in Tanzania. You can learn more about the company on the web at helium-one.com. Ian, thanks for joining us on the show.
My pleasure. Thank you.
Well, Ian, for our audience who may not know you, can you talk a little bit about your experience in the natural resource sector?
Sure. I've been around quite a long while, in actual fact. I'm probably sort of 47 years into my mining career, and it just seems like yesterday when I started. But in more recent years, I've been working with a number of junior companies in a range of commodities: gold, uranium, lithium, copper, etc. So I've got a pretty good background in the sort of general commodities business and got, if you like, aware of the corporate side of things, starting roughly about 2005. So that's almost 15 years ago. And we've had some good successes with the projects that we've taken on board, with some outstanding sort of returns for investors who came on board and joined us at the early stage of our operation. And right now I have a little company called Helium One, which I think has got all the real indications of being a very successful company as well as we move through this sector.
How does the broad market look to you as far as the natural resource sector compared to the big broad market? We have a lot of lows in commodity prices across the board. Do you see that natural resources are really at a turning point and headed higher from here?
Look, I think there's some real opportunities, Andrew, in our businesses in the mining side of things. Robert Friedland, one of the last meetings I went to, called this coming year the revenge of the miners, in that we'd suffered for so long, I guess, that our time was now due. And I don't think he's necessarily wrong. Calling the timing is always a difficult thing, but there are opportunities existing, and what investors and even mining entrepreneurs must do is choose the right project in the right environment. And that way you've got a better chance of success. So it's been able to pick and choose rather than just being a scattergun approach. But the market's tough and remains tough. I don't suppose it will change that dramatically overnight. But again, as I say, with the right project, the right people running it, the right market environment, you can have some real success.
And Ian, do you see the natural resource complex rising with the broad market, or do you see an inverse relationship playing out going forward?
I think, again, there'll be hot spots, Andrew. One of the things, look, commodities by their name tells you that they're usable. So, we obviously reflect the demand that exists from the broad market in terms of infrastructural projects, etc. But I think there is an awareness that a lot of companies have been cutting back in production. Copper and even gold, we're well past, if you like, the big record times of production. And the bigger companies who have not been investing in exploration in any real way in the last, 5-8 years, are now finding that their own backing resources, their own reserves, are diminishing to a stage where they're going to have to go in, look at the junior market, pick up some of these companies, and that will give us that kickstart. But I do think investors are still generally on the sidelines looking at companies that have got good cash flow rather than exploration potential. But that's coming. And I think the broad market, people will have some confidence that the broad market is consistently good, and then they're willing to take a little bit of a portfolio and put it into a risk environment. And, mining is a risky business, make no mistake. But I think we will see upside, Andrew.
Well, I want to get to Helium One in a moment, Ian, but first I want to talk uranium for a moment, a place that you know quite well. We have a fairly large following in this sector, and this audience knows you've been able to succeed in this sector. First, what are the final pieces for this market to come together and move higher?
Well, I believe in uranium to begin with. It's a commodity that is in demand. What we have to see, I think, is the first trigger is significant utility purchasing of the uranium going forward. They seem to have been very sporadic in the last few years, and there's been enough, if you like, loose uranium around, if I can use that term, in the spot market, that guys have been able to save money and save entering into long-term contracts. But I believe that's now coming down, and when you start to see that, when you see the long-term contracts beginning to pick up in volume, I tell you the market will move very quickly, because it's just been too long. We've been in the shadows for too long in the uranium sector, and it's time for us to come back out.
Now, Ian, you've had an involvement in a number of uranium-focused companies recently, and as of late, it appears that you've also been working on some other ventures and have stepped back a little bit from the uranium sector. Which companies are you still involved with, and what is your plan for this sector going forward as far as your involvement?
Look, we took the opportunity when lithium was a hot commodity to be involved in that, and we were lucky enough to pick up some good projects in Argentina into a company called LSC that, again, timing-wise, we got it right from a point of view of selling into a market that was really heading in one direction, which unfortunately goes downwards. But we managed to get our investors a nice return on that, and I think it's a commodity that will come back. On the uranium side of things, I still have an association with a company called PLU, which is Plateau Energy Metals, which is both a lithium and uranium company, and I keep close to it. I think uranium is a great story going forward, and it's hard with the successes you've mentioned, Andrew, I've had in the past, not to be a uranium believer. It just will come back. And, there's one or two small companies I keep my eyes on, and, I try and help out. But I think the uranium market space is one that's worthwhile keeping your eye on.
And Ian, if you were an investor in this sector, how would you get exposure to best take advantage of a upward uranium price?
I'd get into some of these junior companies now, companies that have real resources as opposed to exploration. So they're further down the line of development. They may even have done, in some cases, the PEA or perhaps more detailed PFS, and in some cases even a BFS. And if the numbers are looking good, then that's the kind of environment, because the value of these companies is very low right now. But again, pick and choose. Don't just scattergun it, in my opinion. Get to the stage where you've seen companies that got resources, potentially even reserves, and have demonstrated that the cost of production is in the lower quartile. Because I can make all these sort of thoughts that the market's going to improve, and just as you can, Andrew, and I'm sure your own investors look at this and make their own thoughts through what they learn. But really, if you're in the lowest quartile of an operational performance, you can withstand the blows that the market's going to give you. So look at those companies that are trying to produce uranium in this case, or gold, or whatever it might be, at the lower end of the cost curve, because they will take the pain and survive. And that's where you want to enter now in some of these junior companies.
Well, I'd like to go back to the last cycle in uranium and talk about your work involving the rise of Uramin. Ian, can you take us back to the events occurring in the market? Tell us your thought process and strategy to how you built this up and sold it off to Areva at the time. Can you tell us the story?
Sure, we can. It's a great story to tell. We got the bug in uranium in 2005. Actually, I'd been involved in uranium from 1999, funny enough, and I was trying to make a project work when uranium was selling at $7 a pound. And although we had all the wonderful announcements from Rio and from Kyoto in Japan telling us that, we were causing problems for the environment, one way to clean it up was to increase the number of nuclear reactors. Nobody was really paying any real attention to it. I guess it was lip service in many ways, but we had the words. But by 2005, Andrew, the market had started to respond, and they were looking, particularly via the Chinese market, to build more and more reactors worldwide. And that's when the uranium price took off, and we took that opportunity of picking up projects predominantly in Africa, because I'd spent a long time in that continent. And then we picked up a project in Namibia, we picked up a project in Central African Republic, and we picked up a big project in South Africa. And we took all three at that time through to definitive feasibility study exercises. And it's interesting that all three of those projects were actually ex-Areva to begin with. They had owned them previously, and there was a lot of knowledge in them and a lot of money spent in them. So we had a really good position to start from. And so we worked hard technically to get them right. We also developed exploration in 10 different countries worldwide, which for a little junior company was quite something. And I guess by the end of the first year and a bit, we had gone from a staff of about 5 to a staff of about 100, which sort of tells you the kind of growth curve we were on. And fortunate for us, and perhaps we just called it right, Andrew, the uranium price cycle was such that the uranium pricing just continued to go up and up and up. And when you get into that environment, clever though we can be and smart after the event, people find it very difficult to not believe it's going to continue. And so the investment market behind it was very strong as well, to the extent by the end of 2006, we had got the company listed in the middle of 2006, even though we started it in 2005, listed it in the AIM market, then through to the TSX market at the end of 2006. Got a decent amount of money in, over 100 million at that time. The share price was moving very nicely. Everything looked set, and really 2007 became, the Indian summer. Everything that could go right went right. The market was positive with us. Our studies came back and were aggressively positive. And the uranium market space was, people were wanting to get into it. People were looking at derivatives in terms of buying and selling uranium, that kind of thing, which was novelty in those days, of course, for the uranium side of things. We've got one or two people now already established in the market. But everything was going well, and we just, we've piled success upon success. But, Andrew, and I say this not trying to minimize what the team achieved, because it was absolutely fantastic, but you can't beat a bit of luck, and we were very lucky in getting the market timing right. And the demand that companies like Areva, who believed, just as we did, that uranium was in such shortage that they had to get back into the market space and buy uranium mining companies. And we managed to pick that attention of that senior up, and they came along and took us out in 2007, in August 2007. And of course, funnily enough, we get more or less on the day we sold, uranium was trading at its highest spot price of $138 per pound at that time. So, lots of things went in our direction, but you've got to steer the company, you've got to manage the company, and you've got to work hard, which we did to get the end result we achieved for our investors.
Ian, if you were leading a uranium company, let's say uranium prices are headed up, and if you were leading a uranium company today in a rising price environment for uranium, what would you do differently in this current market condition as compared to what you did last cycle?
I think probably the most important thing I would do is make sure, and you can tell from my accent, it's no surprise to you, I would be very careful as to where I spent my money, because the last 10 years have told us how hard it's been to get money into projects, to get the work done, to achieve a result you want. Now, that first cycle, people were giving us money. It really was, by comparison, a little bit easier than it is today. Nothing's ever that easy. But I think the lesson learned is, guys, take the money you get, use it wisely, don't overload overheads, corporate activity, stick to your knitting, get the right things done, but go with a company that's got resources reserves and have got that profile in the lower quartile, because that's what we did. We got three projects through to, construction decisions, and, we were ready to build. We had started work down in Namibia, in actual fact, and we started building there, what was called the mini plant. There was 3 stages, midi, and maxi. We did the mini, and we constructed a desalination plant. So that would be my lesson, is still you have to push on with the project. You do need uranium. It's a commodity that is in demand. So be ready to get that commodity up and running as quick as you can. To do that, choose a company that's closer to the construction decision if you can. But be careful and mind your money as you go along. Don't waste it.
Now, you mentioned Plateau Energy Metals earlier. Is there another company or two in the sector today that you like that you can mention?
Well, look, you've got the big ones in Canada, which are NextGen and Fission. And they've got good projects, but the challenge that they have, of course, is the amount of capital that would be needed to bring these projects on. But I'm sure they feel very confident they can get that capital. But again, the way I tend to like my work is you try and keep the capital as low as you can, because again, it's hard to find. It's not easy. Nobody just gives you a check just because you're a good-looking guy or you talk cleverly or whatever. You've got to demonstrate that the credentials of your project are in fact real. And by keeping the capital tight, it's generally easier to get the message across that you have done your homework correctly. But they're good projects. But there's a lot of juniors out there. They've been dormant for so long, Andrew, that some of them are going to get attention, including Plateau Energy Metals.
Very well. And Ian, can you speak just briefly on the gold side of things? I know you're doing some work there. Can you speak briefly to your work at K92? And then also, you've recently come on board with Condor Gold in Nicaragua. Can you speak to both of those companies?
Yeah, look, I believe the gold market is in a positive state at the moment. As I mentioned, I think earlier in this interview, Andrew, if you like, the peak supply has already been hit, and we're now in the downside of it. There's just not as much gold about, and a lot of good projects have already come and gone, and so that tends to mean you're at the sort of average projects where you need a really good environment to make them work, and it's happening. But we were fortunate enough to pick up an asset from Barrick Gold in 2014 and 15 of this decade, called K92 Mining in Papua New Guinea. And that little company survived a lot of difficulties. Times were hard in 2015, 16, 17 in terms of gold equities and gold companies as a consequence. Money, again, was just that tough environment, but we kept it together, kept it tight. We didn't build up a huge overhead that just crippled us. We kept it very, very tight. And we had good fortune again come our way in 2017 with some drill holes that we had been planning to do, but it was forced upon us in some ways for certain circumstances. And that gave us what we call the discovery hole in Cora North, which is part of the ore body within K92. And we've now got an ore body up there that we're mining that I know we've had a very successful year, 2019 in. And we are, just as I've been talking about previously, in that lower quartile of operating costs. So again, we can withstand the pain that if the gold doesn't hold up at $1,500 an ounce and it goes down to $800 an ounce, well, I can tell you there's a lot more companies that are going to suffer before us, and that will cause the change to occur quicker rather than later, and we're still going to be there in business. So that was a really super operation that's come together, and the guys who are running it have done very well. I stay on the board as a director of that. I was the CEO. And then recently, as you mentioned, I've been involved with Condor Gold in Nicaragua. It's earlier stage, obviously, than K92, which is a producing mine. But it's got, again, the right sort of indications, a decent size ore body. One of the things I guess I could have said when you asked me now to think about, one of the things that's key for projects is to be a bulky type resource. A small resource, even though it's good grade, just doesn't last long. And you really need to have bulk to give you the sort of volumes you want and have a penetration in the market space that you're involved in. So Condor's got that kind of background. Nicaragua, everyone will talk about country risk. Nicaragua, Papua New Guinea, yeah, they're up there. There's risks associated with it. But, Andrew, in today's mining world, there isn't a country that you would say is ideal. Whether it's the tax environment that makes it very tough, even though the legislation is clear, or whether it's the political risk and the challenges of corruption, whatever it is, it's there. Everyone's a tough one. Security in parts of in Africa, for example, and South America having so many chops and changes, they're all tough. So again, choose that project, choose it wisely, and make sure it's got the size and the ability to be at the right end of the quartile. And K92 covered that. So they're going well, and I like the gold space.
Very well, Ian. I appreciate you sharing the information there, and certainly congratulations on K92. The company has done well under your leadership and where it's going right now. So congratulations once again. Now, tell us about Helium One, Ian. Why this company? Why Helium? Give us an overview.
Okay, well, look, let me just start by saying that in March of this year, we had just successfully exited from a lithium company called LSC Lithium. And so for a period of time, I actually felt I had time in my hands. And there was a colleague of mine called Neil Herbert who approached me regarding this helium project in Tanzania. And the more I got interested in it, the more I became aware of the situation in the helium market space, because it's not a normal commodity guys like me get involved in. You know, I'm hard rock, and I understand hard rock, and been lucky in hard rock, but this is a gas project. But the market space, and everyone understands helium balloons and all that good stuff, the market space demand for helium is about 40% involved in the medical side of things, CAT scans, etc. Another 40% in the space environment, space programs are involved, because helium is the second lightest metal known to man, and you cannot recycle it. So once it's used, it's used. And there was a shortage. The BLM, the Land Management Bank in the States, was the area where you could actually go and purchase helium in an auction, but that closed at the end of 2018. And so what was already a difficult market became even more difficult in terms of trying to get access to supplies. Now, we were lucky enough, you know, the guys who I work with were lucky enough to have picked up some project licenses for helium in Tanzania. It dates back to the sort of 1950s when the old British Geological Society were out looking at hot springs, and they found that some of the springs that they were looking at contained helium. We then, by coincidence and by good timing, I suppose, got involved with Oxford University, so a rather prestigious business environment for us. Everyone knows the name Oxford University. They started to do some work in trying to understand how you could solve this helium shortage, and they came into Tanzania with us and started sampling these areas where we had got the licenses, and they convinced themselves, and therefore us, by their independent measurements, that we were seeing helium bubbling to the surface at 10%. Now that's an extremely unusually high grade, and whether it's gold, whether it's lithium, whether it's uranium, high grade matters because it gives you better operating costs again. And so with this one, 10% helium, it compares with the byproducts running at sort of 0.4%, and byproducts generally of the oil and gas industry, which means you've got to sell your oil and gas before you can make the helium. We are a standalone helium project, meaning we are completely unencumbered by the market risk for oil and gas going forward. If people believe we're going to be electric vehicles in the next 10 years and there's nothing but electric vehicles, then you'd have to say maybe big oil and etc. is no longer the size it's going to be. And if that's the case, then we're more than likely going to be short of helium coming from that byproduct. We've got it as a standalone, and so it's a really sweet project as a consequence, and it's low capital costs. So we get involved in that. We've been working it through, and we are now drill ready in Tanzania. We are looking to list the company in Australia as it happens, and I'll tell you why in a minute, in the early part of this first quarter. Do the drilling towards the end of the first quarter, and if all our work has been done correctly, and I think we have done it correctly, then I hope we'll see the success of a gas flow in one or two of the early holes. And we chose Australia because some companies had been involved in Australia, and just as I said, if you had mentioned to me, now that I can talk about helium, I sound as though I've got some knowledge of it, but a year ago, I had no knowledge of it other than helium balloons. And so we wanted to go to an area where helium had already had an introduction in terms of an industrial gas, an industrial commodity, and Australia had that background, which is why we chose Australia for our listing. So we are now in a position where I think we could become a very dominant producer of helium in the marketplace going forward. And as I say, because it's standalone, it's just quite unique in that regard. And I can't see how companies like Linde, Air Liquide, etc., the industrial gas suppliers to the marketplace, will not come knocking on our door because they need reliable supplies. And as I mentioned, bulk of them come from byproducts. One of the biggest suppliers is Qatar in the Middle East. And, with the political games that go on in that part of the world, unfortunately, that makes it a little bit more high risk part of the world to enter into long-term contracts. So if we can get this, bring the honey home from the bees, etc., on the Tanzanian projects, then I really think we're off the races, which makes it a great investment project as well.
Very interesting, and it's a place, helium's a place that I have not looked into all that much either. It is an interesting situation that I think I'll have to spend some time on. Now, can you tell us right now, I know it's not listed yet, but can you tell us about the major shareholders that are in the company now? What do you expect the capital structure to be going into the listing? And then what is the end goal, Ian, time frame for the business?
All right. Look, we have mainly a large number of high net worth private investors in the company. They're the ones who found it quite interesting. A lot of oil and gas people kind of get it and they understand the project, but they are hydrocarbon people, and this isn't a hydrocarbon gas. And vice versa in the hard rock industry, they get it, but they don't really understand gas. They understand gold resources and they understand copper resources and uranium resources, for example. So we kind of concentrate on high net worth. So there's a range of high net worths. We probably get about, I guess, somewhere around 120 major investors. But management and insiders, and myself included, hold upwards of plus 20% of the company. We have one oil company that's came on board called Solo Oil out of the UK. They have about 10% of the company. We have about just 160 million shares out there. We are setting the placement for Australia to keep the value as tight as we can, because I think we'll find it easier to get it over the line at the lower valuation. And then really the upside is just enormous when we hit gas flow. So I would suggest to you the sort of market cap of the company going in to the ASX listing will be sort of 20 plus million Australian dollars, not US dollars. And so it'll be a tight environment for us, but I think success at the drill end will give us the kind of boost we're expecting. We've already had in the past approaches from those companies I mentioned, like Air Liquide, Linde, the guys who need helium to supply in the marketplace. They're not explorationists, so they are sort of hanging there in the sidelines, waiting until we hit the gas flow. When that happens, and then I believe they'll be all over us like a rash, looking to get contracts put in place regarding offtakes. And of course, that then means that we'll probably end up with one of those companies probably putting up the capital to build the operation. And a sort of basic operation, Andrew's roughly about 50 million euros is the kind of costing we had from one of the companies. And that's going to pay back if we get the helium that we expect to get. It's going to pay back based on the sort of last BLM, the last land management bank pricing, payback of less than a year. So it's an extremely positive economic environment. And so when we get there, I think when we have gas flow, we'll be singing a different story than we are today, because I'm pretty sure the guys are going to be knocking on the door with some interest, and we'll just see where it takes us.
And Ian, will the IPO price in Australia, will it be close to where management is currently owning the shares in terms of price, or how's that going to work?
No, very close. I think, we'd obviously like a small premium on it, but we're not there to be silly about it. So we're going to keep it tight, because I think, it's a risk, like any mining business is. But, if we can get the gas flow we're expecting, and we've done all the homework, you couldn't get better homework done in terms of identifying where we want to drill. And remember, we see helium coming to the surface anyway, so it's there. It's just what volumes is going to come in. If we get that success, then we are literally off the races. So getting everyone in now at the pricing that's appropriate, which is plus or minus where management came in. I actually came in above where we're listing in one of the placements. And there was so much excitement in 2017 that the previous management were able to raise some funds at sort of 28 cents per share, and we're now raising at 10 cents a share. So everyone will get in at a price that I think will give them a lot of upside, Andrew.
Can you speak to Tanzania for a moment? Can you speak to the environment there as far as the jurisdiction, the political environment?
Sure.
How about the costs, the cost structure there? What are you guys going to be dealing with in terms of costs for your currency that you guys will be reporting? And then also, are there any other projects that you guys are looking at for Helium One?
No, we have tied up most of the licenses that have got helium showings on them in Tanzania, and that grade that I mentioned, Andrew, of 10% helium bubbling to the surface is just so rich by comparison to anything else in the world. I think it behooves us to make sure that we get this project as tight as we can and move it along as quickly as we can. Tanzania is Tanzania. That's the truth of it, and it sounds like a banal statement, but it's got its challenges and it's got its opportunities as a consequence. It's stable. It's had democratic elections held there for some considerable time now. I think they got independence in the mid-60s kind of thing, 1960s. So it's 60 years since that. And there's been no real drama in country from a political point of view. More recently, of course, it made the headlines because of its challenge to Acacia, kind of owned by Barrick Gold themselves, because they believed that they had been an underestimation in the tax that was paid to the government. And right or wrong, and I can't give you any more details on it, but I do know that the CEO of Barrick has settled with the government, and there is a check that has been paid because they must have agreed that there was an amount, a deficit in place. So by getting that approved and done this year, which Barrick has done, I think it's created the change that we're all waiting for in country, for people to believe that, you know, Tanzania is on the up. Because when I first went to Tanzania, Andrew, in 1997, I put together the Geita gold mine for Ashanti Goldfields then in 1997, 98. And the Tanzanians regard that as a national treasure. It's not it's a mine that's been producing 250, 300,000 ounces of gold a year. So it's a good mine. And not once have you heard it in the headlines as being they're doing this or they're doing that. That's worked very well. And in those days, in the late 90s and early 2000s, Tanzania was regarded as a great country to invest in for international investors. That kind of gets soured, as I say, with some of the notes more recently with the Acacia story. But I think now that it's solved, I think, as I say, that Tanzania is going to be on the up. And we certainly get lots of encouragement from the government. I cannot say that there's a negativity. There is a pace at which everyone works at, which might not be what we'd all like, but they're the government, I'm not, so I have to go at their paces and manage it to the best of our ability.
What's the operating currency there in Tanzania?
It's a local currency, Tanzanian shilling. You know, it's stable, it's managed, but really, Andrew, most things these days are almost dollar denominated.
Yeah, certainly. Well, that's going to be interesting. I had to keep an eye on what's going on with Helium One. And can you speak to, when you guys do the ASX listing, Ian, will you guys be looking to do an OTC listing in the US at any time shortly thereafter?
Yes, that would be our logic. When with other companies like K92, for example, that we talked about earlier, we did the OTC, and it makes a big difference. There's nice volumes comes out of that way. And helium, you know, in the States, you've got an environment at the moment where a lot of political aspects are being regarded as strategic minerals. You know, whether it's uranium, again, as we talked about early on, Andrew, whether it's lithium resources, because they want to make sure there's enough lithium for the battery manufacture for electric vehicles, or whether it's helium. There beginning to be this view that the state should lock up certain supplies rather than just leave it to everyone and their uncle in the world today. So knowing that that's, if you like, a scenario that's increasing in terms of intensity in the States, it therefore makes sense to have a company with helium resources capable of being traded in the States because there is interest in it.
Absolutely. Well, Ian, why should investors pay attention to you and your ventures, including Helium One? What would you say to potential investors?
That's a great question because it puts one in the spot, and it's not my favorite to shout from the rooftop what we've done and what we haven't done. But I think the fact that we started this interview, Andrew, by saying that I've been 47 years in the industry probably tells a story that I've been able to manage the ups and downs of the industry over that period of time, and that I'm still in here shooting and making things happen. And I think that should give some investors a level of confidence. We're not just a one-off, one-hit wonder type of thing. I think we've got the knowledge and the background and the ability, and we've had some successes. And you won't get everyone to be a success. It's just, life's not as easy as that. But I think we know how to manage a company well and try and get the best out of it for investors going forward. And that should give people a level of comfort.
And Ian, for investors who are going to follow Helium One, what's the best way for them to keep in touch with Helium One or to even reach out to you?
Look, we're on the web page. They've got my contacts there. They can feel free at any time to send us an email, get on the phone, 604-367-8110. Happy to take calls in Helium One because I'm excited about it. I think it's fun. And if it's not fun, Andrew, after 47 years in the mining industry, there's no point in me doing it.
Absolutely, I agree. Well, Ian, thanks for taking the time to join us on the show. Really looking forward to having you back again soon to update.
That would be great. I've thoroughly enjoyed it. Thank you very much for your time, Andrew.